So hello everyone, and welcome to Fusang Focus, hosted by Fusang. I'm Ila, your host for today, and week by week we cover various topics with various industry experts. So for this week, we've got with us the CEO of Fusang, Henry Chong, Asia's first digital exchange platform, and our very special guest, the CEO and founder of Merkle Science, Mr. Mriganka Pattnaik. Welcome both.
Hello.
Thank you. Would you
Hello.
want?
Hi, everyone.
Hi, Mriganka.
Yeah.
So thank you so much for joining us today, Henry and Mrigank. So I'll just quickly jump onto the topic today, right? So we're going to talk about evolving crypto compliance landscape. Just a quick intro. This would say like the rapid development and also increased functionality and growing adoption of new technologies. It continued to pose significant challenges for regulators and also private sector institutions in ensuring that these technologies are not misused for money laundering and financing of terrorism purposes, etc. So having said that, right, Mrigank, I'm just wondering from your perspective, what are the key potential risks facing virtual currencies?
Sure. So, I would say that there's like, as with any new technology, there's definitely a long list of potential risks. But three that maybe are the most significant would, of course, be AML CFT risk, like anti-money laundering and counter-finance terrorism risks, then security risks such as attacks or vulnerabilities in smart contracts, as well as the regulatory uncertainty around a lot of virtual currencies. And let me elaborate on each of them to tell you a little more. So AML CFT risks, of course, is the number one concern. So we all know that, while virtual currencies are powerful and decentralization is a very novel as well as unique concept, because of this, cryptocurrencies have become very popular among criminals, scammers, as well as a plethora of other illegal users out there. And even with the COVID, so while businesses are declining and there's like a slowdown in GDP everywhere, there's actually a rise in COVID related crimes where there are criminals posing to be WHO and asking for Bitcoin for donations. And I used to previously, before Merkle Science, I used to also work at an exchange. So through our work currently with exchanges, as well as my work with Luno before, I used to see how the landscape in terms of like the technology, as well as how criminals are utilizing it, used to constantly evolve. So even law enforcement agencies, as well as like regulated financial institutions such as Fusang, are always playing catch up to these criminals. So having more and more technology or more and more tools and collaboration to counter AML CFT risks is definitely a must. And then the second part of it isn't exactly related to AML CFT, but more around security risks. So we see a large ecosystem of decentralized finance companies, as well as a plethora of these hybrid DEXs and different models of cryptocurrency exchanges, as well as tokens evolving. Now, with any new technology, it's obviously expected that there would be bugs or vulnerabilities that have not been identified as of now. But in this case, we deal specifically with money. So like a bug that could be detected could be exploited to maybe, cause losses up to like $25 million for a new protocol which people have invested in. So I definitely see that as a very big risk, because this isn't even technically criminal activity. It's just people exploiting flaws or vulnerabilities in new technology that's come out. And until it happens, it's very difficult for the creators of this technology to even foresee these risks. And the last one is more around regulatory uncertainty. So I'd love to hear Henry's comments on these as well, because like Fusang would have dealt a lot with this throughout. And so, of course, like 2 or 3 years ago, there was a lot more regulatory ambiguity because regulators just weren't taking a stance on cryptocurrencies. But of late, we've seen FATF, as well as the MAS in Singapore, EU's regulatory authority, as well as the FCA in the UK and Malaysia's SC as well. All these governments around the world are trying to bring more regulatory clarity around this. They're coming up with licensing regimes for cryptocurrency companies. But in spite of everything regulators do, like as is obvious, like the technology keeps evolving at a faster pace. So like no matter how much they regulate, there are still new areas where there's a lot of regulatory ambiguity. So this becomes difficult, especially for companies operating in the space, because like at one moment, because of their business model might be fine because they account for the fact that there are no regulations for what they do. So they account for the cost related to that to be low. But like in 3 months, suddenly there could be a hack or a vulnerability exposed, and suddenly regulators come up with a new decree, thus increasing costs for companies in the space as well.
Yeah. You mentioned that cyber criminals are getting more and more inventive these days. Can you give us some color on that? Like what were some of the attacks or the scams that you've seen in your time?
Sure. So, I mean, at least from an exchange perspective, there's always the most updated or the most high-tech tools are always used by cyber criminals, where they would even impersonate like a legitimate company's website and attract users to the same website so that they give away usernames and passwords. I think this is like 101. But with DeFi, I think I was recently reading, 2 months ago, there was a hack where the BZ exchange got hacked by a cyber criminal. So what exactly happened there was that a cyber criminal exploited some loopholes in the system of flash loans, where they took a quick like flash loan and then used arbitrage across the platform without getting into too many details. But basically, customers on the on BZ like lost money because a cyber criminal exploited a loophole to gain funds. So from that perspective, in terms of exploiting vulnerabilities, they're definitely getting smarter. These people typically have a very good knowledge of financial markets as well as technology, so are able to very quickly find out opportunities to drain funds out. And in terms of like other cyber criminals, like terrorists, ransomware, so again, like there are rumors that like there are some terrorist organizations that even build out their own mixing services so that they can monitor this, like and they can make sure that it keeps advancing. And like of course, then there's blockchain monitoring tools like us that come into the picture, which try and de-anonymize some of this. And then of late, there's been like evolving tools such as Wasabi wallets, which actually move around like your Bitcoin several times, so that blockchain monitoring tools like Merkle Science find it difficult to even trace like funds because there are too many hops that the cryptocurrency has moved around.
Yeah.
So, and recently another trend we've seen is that like now that taint has become inherent, like checking whether your Bitcoin is clean or comes from a criminal source has become inherent for many cryptocurrency companies. We see cyber criminals intentionally sending funds, like minute amounts of funds, like $1 worth of Bitcoin or 10 cents worth of Bitcoin, to thousands or 10,000s of addresses, so that all these other addresses also get tainted, whereas they might be legitimate users who have no idea or have never dealt with a criminal before.
Yes. And then how is Merkle Science helping to deal with some of these threats?
Right. So, so in terms of like our company, I mean, we do try and stay up to date with the latest in terms of the evolution of mixers or even items such as Wasabi wallets. And we invest a lot of R&D in at least deciphering how these tools work and how we can ensure that exchanges can at least be intimated when any of these tools are used. But that being said, I think there's another huge like roadblock in terms of privacy coins gaining more popularity. So inherently, privacy coins have a lot of features where even blockchain monitoring tools cannot decipher how to go about, like unwinding or how to go about tracking these privacy tools. But like my co-founder Nirmal, he used to work at PayPal as a fraud data scientist. So he has extensive experience working in the payment space. So what we're trying to do is trying to implement a lot of the learnings from there onto this, where we don't just look at on-chain data, but also try and look at off-chain patterns to try and decipher criminals. But again, this is a learning process where we constantly learn from our customers, regulators as well as the ecosystem as it progresses.
Yeah, I think it's very interesting that you talk about privacy coins because, I think that to bridge us into regulation, that's a hot button topic for regulators, where these coins in many cases are inherently designed so that you don't know who is using them. And in today's world, that's really not how financial transactions of any asset work, right? Now, we live, like it or not, in a world in which every asset needs to be linked to some individual's name. And certainly a lot of regulators that we talk to are just not keen on privacy coins, period. And that's why a lot of exchanges, including ourselves, have just stayed away from them. We have no idea how we could even begin to fulfill our regulatory obligations with those coins. Do you see that as a broad trend in the industry?
Yes, so there's definitely, I think the largest amount of criminal activity still happens on Bitcoin, because that's where the most amount of awareness is. But I would say the most sophisticated criminals have definitely moved to using combinations of cryptocurrencies or using a large amount of privacy coins when they need to launder funds. And I think this, the problem is very intricate because this requires help from tools like ours, but also collaboration with law enforcement and academics who are at the cutting edge of research.
Yeah.
So what I foresee is that going ahead, as like you mentioned, Fusang doesn't deal with privacy coins. So I think the crypto industry would split up into regulated entities as well as unregulated entities. So the regulated entities are the ones that have strong regulatory relationships, almost function like banks, have an in-house compliance team. And the unregulated ones would move more in the domain of DEXs, who allow everything, or even cryptocurrency exchanges on darknet marketplaces, which would typically allow even privacy coins, etc.
Yeah, I think it's really interesting that you mentioned that a lot of cyber criminals are still using Bitcoin. I would have thought that it's really not a very good currency to use if you're trying to do naughty things, precisely because by design, everything is public. Obviously, a lot of it is anonymous, right? You don't know necessarily who any given wallet is owned by or who is making a transaction. But just the fact that literally all transactions are out there for anyone who's to see, and I assume for companies like Merkle Science to actually go out there and run data analytics on these transactions, I'm actually quite surprised that you still see so much criminal activity on it. I heard this anecdotal quote anyway, that the FBI in the US actually say they really like it when criminals use Bitcoin for transactions, because it actually makes it easier for them to trace than if they were using physical cash, where realistically there's just zero tracing that they can do.
Right. No, I actually, so that quote has gone around pretty often, where it is true that Bitcoin is much easier to trace and is worse than using, say, cash. But at the same time, it's an awareness issue as well. Criminals need to steal from someone. And if they're not dealing with privacy coins, it's easier to educate them. Or we saw a ransom, a kidnapping case in Malaysia where the criminal basically asked for Bitcoin for ransom. So in that case, if it's an old lady you're blackmailing or taking ransom from, it's just easier to get Bitcoin from them than, say, a privacy coin or something very niche, which is why it still has a huge volume in terms of.
That's actually a really interesting angle I haven't thought of before. It needs to be user friendly for.
Exactly. I mean.
As well. No, that's very.
Yeah.
Okay, so that's interesting. So what are the possible avenues, right, out of this topic that we're discussing to address these compliance concerns?
Mm-hmm. Yeah, I mean, I'll start first. Fusang, we've set up from day one to be fully compliant and fully regulated. At least for ourselves, that has always been the angle that we wanted to take about business. And we've always believed that there is a very specific niche for people who only want to deal with someone like ourselves. The truth is, years ago, we first started exploring this business because we ourselves, when we were trying to invest into Ethereum, we decided that we couldn't, not because of the underlying asset, but because we couldn't find any service providers. Right? Back then, we ran a number of regulated hedge funds, and as regulated institutions, the way in which the ecosystem operates in, we were just not comfortable with. Certainly back then, I remember people would say, hey, We don't sign contracts. We don't have any counterparty agreements. If you want to buy some Bitcoin from us, you wire us some money and we promise we will send you back some Bitcoin. And we were like, well, okay, this is not going to work for us. The industry has come a long way since then. But still, we believe that there is a lot of room, not just for us as an exchange and custodian, but for a whole ecosystem of people in the digital asset space who do want to fall into that highly regulated camp and do want to focus on dealing in a more professional and institutional manner.
Okay. So do you have any opinion on that, Mriganka? Or hello?
Yeah, so I mean, it's quite interesting to hear Fusang's opinion on it. And of course, they've had years of experience already dealing with the traditional financial institutions.
Yeah. We lost him.
I think it's the connection.
Hello? Oh, there you are. You're back.
Hey, sorry guys. I think I disconnected for a while. Where did I cut off?
I think you're talking about the traditional business model. Yeah.
Right. So I think what I was saying is, of course, it's interesting to hear Fusang's perspective, as they must have already had a lot of experience in the financial services industry. But what we're seeing is potential avenues to address compliance concerns these days is typically regulators themselves. Like if you have a compliance query, directly reaching out to your regulator often is a very good way of trying to answer those concerns or figuring out a way around them. And apart from that, like we see a lot of ecosystem-based resolution as well. So especially like there's this new thing called the FATF Travel Rule, right? For those who are not aware. And in the cryptocurrency industry, everybody, like half the people don't understand what this is. And the other half are wary of how they're going to implement it. So a lot of it, I mean, a lot of the solutions these days are actually coming from industry bodies, where industry bodies like Access, GDF have actually become very active in getting like exchanges, regulators, as well as the whole industry together to try and sort out a solution that doesn't say kill the industry because of very high compliance costs, but at the same time is reasonable from a regulator's perspective. So I'd say industry bodies have also become very unique in terms of possible avenues to address compliance concerns.
Yeah, you know, I just want to echo what you say about the regulators, because we at least have been very lucky in that whenever we do reach out to the regulators, they're more than willing to have a conversation, right? So we can go to them and say, hey, look, we've got these things, we've got these suggestions, what do you think? We don't always have necessarily answers at that point, but they're always open to having a conversation, which I find very heartening. And you know, to be honest, I think that regulators, at least with regards to the digital asset space, get a lot of unfair flack in many cases. You know, people blame them for everything. They say regulators are too slow. They don't let us do things. And while that may be true in some cases, I actually think overall regulators have moved much more quickly in the digital asset space than they have in just about any other technological revolution. I mean, look at how long it took most regulators to be okay with cloud-based data storage for most financial institutions. You know, it took 10 years after the technology really came about for them to be okay with it. I actually think in the digital asset space, they've moved very rapidly. You know, just in the last few years, as this whole asset class and industry has picked up, many countries have already put in place licensing regimes. They have, you know, even things like AML reporting rules. You know, in Malaysia, obviously, where our exchange is based, the central bank actually has very specific rules for how they want us to report on both fiat currency and cryptocurrency transactions. And so, you know, a lot of these things are very new. They're just getting started, but it's quite encouraging, I think, to see that regulators really are trying, you know, and honestly, they're trying to innovate like the rest of us. We all operate in a brand new industry. We all need to figure out these things as we go along. But I do think that regulators really are working on it at great speed.
Okay. So what do we think? What could be technological solutions for this? I- Is there anything that we can do in order to lessen the threat of the cybercrime, or, even being more compliant, even to even help out the regulators? Is there
Uh,
any?
I'd be keen actually just to explore if Merkle is working on, you mentioned the FATF Travel Rule. We were very interested to see them work in that area and began to think about how to link that up. To me, the biggest issue is always when you're trying to work across counterparties, right? When you
Right.
initially need cooperation from multiple firms, that's always where it gets tricky.
Right. So, I mean, like there are definitely like technical solutions out there. So for your KYC and AML, there's like a plethora of traditional players like Synopsys, Thomson Reuters, WorldCheck, Acuity, as well as Comply Advantage. I think these are some of the common names. And so again, for blockchain transaction monitoring, there are several tools out there. Typically, most of the larger companies use multiple tools here. Like we have several customers who tend to use multiple tools for each of their unique features or combining data sets here. And then again, like Henry mentioned, FATF, like FATF's travel rule. So in terms of our approach to that, we would probably partner with the firms out there. So as per my knowledge, there are three major companies out there working on it. One called Netkey, then Cigna, as well as Shift. So all these companies are trying to evolve, or they're trying to create like hybrids of an open source protocol as well as encryption methods that counterparties can actually communicate. Like say Fusang needs to communicate with Synergy about a customer that they have in Malaysia. So they're trying to come up with different types of encryption methods to share details across these counterparties, but in a way such that A, the user data doesn't get compromised, and B, that it's secure. And I think so far, at least for the FATF, there has no clear winner has emerged, because no clear problem statement has emerged as well. It's a moving target in that sense. Like there's still a lot of regulatory liaising going about to decide in exactly what way it needs to be complied with. So in terms of our approach, because of that, we're staying in touch with all the regulators as well as all the exchanges, and we will probably opt to partner with some of these existing players rather than build out a solution by ourselves, because that's like just solving the FATF issue is a company in itself. So we'd rather focus on blockchain monitoring, have a few rules in place which probably flag out any FATF related risks or FATF like loopholes that are being exploited, and at the same time partner with these companies so our customers can deal with the FATF regulations that way.
Yeah. And I think it's also important to highlight for our audience that these are not crypto or blockchain specific regulations. The FATF Travel Rule is something that all financial institutions need to comply with, and honestly, all financial institutions struggle with. Right? All of these same issues that the digital asset industry grapples with are not solved issues either from traditional banks. I always tell people that
Right.
it's so fascinating that in 2020, for you to wire money from Singapore to London usually will take overnight, right? It'll take one day. It's quicker to put money in a briefcase, get on a plane, and fly to London than it is to wire money overnight. And a lot of people always say, like, well, why? How is that possible? I'm like, well, because there's a lot of stuff that goes on behind the scenes during that transaction. There is a lot of compliance work that people need to do on both sides. And I actually think that if anything, blockchain-based technology and digital assets can help improve upon some of those things, right? And yes, we do need to build out new technology and platforms, but as these things start to come online, hopefully we'll actually deliver on the promise to end users, which is easier, better, cheaper, and faster transfers than what we have in the financial industry today.
Interesting. So
Yeah,
I believe.
exactly. So Henry, I mean, like one thing I'd love to know from you is, so where do you think Fusang would draw the line? Like, I mean, now clearly you must have seen there's been an increase in your compliance costs as more and more regulations come in. So as a business, where do you think you would draw the line, or Fusang would draw the line, or like you feel it would be reasonable for regulators to set some sort of threshold for companies in terms of their compliance processes? Because again, with the FATF, it's more like there are these requirements for traditional banks, and that's been copy pasted onto cryptocurrency companies. But with banks, there would be a handful of them who are across like different countries. But with cryptocurrency companies, the number of entities would go in the hundreds of thousands, right? So what are your opinions on the rising compliance costs?
I mean, I think, like it or not, regulators are going to apply uniform standards to most firms, most industries. So the FATF Travel Rule, for example, I think will be applied uniformly as long as people are transacting value. Yes, it will be difficult for a lot of especially the smaller crypto companies to comply, but unfortunately, I think that's just the modern world we live in. Right? Gone are the days when you could rock up to a bank with that suitcase full of cash and actually deposit it. It just won't work anymore. Right? Every asset, every transaction of value today must be linked to an individual, to an ultimate beneficial owner. Even jewelry stores these days, right? If you buy jewelry above a certain value, that store is supposed to know who you are and verify your source of funds. Whether this is art, jewelry, law firms, what have you. This is just, I think, a mega trend in the world today, where any value transaction is going to be subject to the exact same rules. Certainly for Fusang, we're very squarely focused on digital securities, even more so than pure cryptocurrencies. And especially in that area, we think that regulators can and will and already are treating it just like any other traditional paper-based security. Every regulator we've talked to says, yeah, I mean, yes, you have a digital share, you have a blockchain-based share, we don't really care. You must follow the same rules as any other traditional security. And as long as you follow those rules, you can proceed and do what you need to do. But on the flip side, they say, don't come to us telling us that because you have this new technology, you expect to have a different rule set just because it doesn't work for you operationally. So for better or for worse, I think we will have uniform standards across players for a long time to come. And to be honest, I don't necessarily think that's a bad thing. I recognize that it is a burden for a lot of companies, but by regulators taking the approach of just bringing in these new things into existing regulatory structures, it actually makes it a lot easier, certainly for a lot of financial institutions to interact with this space. Right? Once they have that clarity and regulator says, for example, we will treat Bitcoin like we treat any money, or we'll treat a digital security like we treat any paper security, it actually becomes quite easy for these firms to start exploring the space because they say, yep, I know exactly what that looks like. I know what the rules are. It fits into my box. I can proceed. If we need to come up with brand new regulatory schemes, I guarantee that financial institutions will be wary just because they say, hey, I've never explored this before. I need to go evaluate a whole new asset class. Is it really worth the time and effort right now? And honestly, in many cases, the answer will be no. So I actually am encouraged by the approach a lot of regulators take. What I do think everybody, both us in the industry and the regulators need to do is we need to take the principle of the rule, right? And be flexible in terms of how we actually apply it. So the FATF Travel Rule principle says, whenever two financial intermediaries send a transfer of money or some asset between them, the transferor and the transferee should know the identity of that person, and you need to help each other out and make sure you pass identity back and forth, right? That's the principle. That's the outcome we want to hit. And I think we and regulators need to be flexible in terms of saying, all right, how do we get there, right? Just because traditionally this was how we did things doesn't necessarily mean that this fulfills the principle. So one great example that you brought up earlier, and certainly is something that Fusang does, is we verify people's passports by matching their passport against a live picture of their face. And we think that, if anything, that is a better way to verify an identity document than someone handing me their passport in person and having to have a human compliance officer look at that passport and trying to judge if it's real or not. Honestly, none of us are trained document forging experts. To be perfectly honest, how many bank compliance officers could identify a forged passport? So what I think is important is to say, look, the principle is there. The principle is you must verify identity. So both us and regulators are flexible in terms of how we get there using the latest technology.
Okay, thank you, Henry. So as we can see, is increasing adoptions and also innovation relevant to KYC and AML, hoping that we might see or witness the emergence of improved protocols. Hoping so. So thank you so much, Mrigank and Henry, for your valuable sharing, and hopefully the audiences have benefited from our discussion today. So for those with questions, please do not forget to post in the comment box, and we'll get back to you very soon. So till we meet again, stay tuned to Fusang Focus and have a great day. Thank you. Bye.
Thank you.
Yeah, thank you.